Let's take a look at your market news now. Asian markets were focused on Washington this morning, where discussions between top US and Chinese negotiators are scheduled to take place from today. But prospects of a sweeping trade deal appear to be dimming. Negotiators are entering this week's trade talks with low expectations for major progress on reaching a comprehensive deal. Tensions have risen ahead of today's trade talks after the United States imposed visa restrictions on Chinese officials and blacklisted 28 Chinese entities for their alleged involvement in human rights abuses against Muslim minorities. Markets are buoyant, however, ahead of the talks, with the Shanghai Composite rising 0.75% to 2,947 points. The Nikkei in Japan is 0.5% better, off at 21,551 points. And the Hang Seng in Hong Kong is 0.25% stronger at 25,746 points. Wall Street rose last night on hopes of progress in those US-China trade talks. Those stocks paired gains late in the session after Chinese officials said that Beijing had lowered expectations for negotiations this week. The Dow Jones Industrial Average rose 0.7% to 26,346 points, while the S&P 500 gained 0.9% to close at 2,919 points. The Nasdaq Composite added over 1% to close at 7,903 points. Let's get more on the markets now. Arabile Gumede is standing by at the Johannesburg Stock Exchange. A very good afternoon to you, Arabile. Over to you.
Yeah, good afternoon, Nzinga. Well, the market picture has certainly turned positive this afternoon. It's around 0.5% better off than for the JSE All-Share this afternoon. So a much better picture than we've seen, of course, in recent times. Perhaps some buoyancy coming through from Asia, but perhaps a little more hope when it comes to that China-US talk situation as they kick off proceedings. Of course, today we are expecting US inflation data as well to come out a little bit later. That will perhaps set the tone as well for the Federal Reserve on whether they will continue to cut interest rates a little bit later. We did get sentiment out of their meeting in September that indeed they did want to cut interest rates in the last meeting, but they're not sure on how exactly to move forward from here on in. Well, the globe certainly has a whole host of news, and that data is certainly impacting the market. Let's see exactly what the numbers look like, particularly for Europe and South Africa, and we'll unpack that data in just a bit. Well, that market picture, as you can tell there, slightly positive. Some negativity coming through for that oil price, though, as well. And we'll unpack all of that data in just a bit. Let's get to chat now to Gary Boyce and then from Rand Swiss as we unpack this market picture a little bit more. Gary, thank you so much for the time. Really appreciate it. Positive tinge to the All-Share. Slightly better than what we've seen of late, really. And perhaps a segment of the market that we could perhaps look at as to why we're perhaps a little more buoyant right now.
Well, I think certainly the loose monetary policy in the US is helping. So as you mentioned, the FOMC minutes showing that we probably are going to get looser monetary policy from the US. That generally is beneficial for emerging markets. So seeing a little bit of money flooding back in this way is certainly a good thing. The Rand has stubbornly been above 15 Rand to the dollar. Yeah. So, a little bit of strength here I think is probably warranted. If you look at the specific counters as well locally, it's really our resource sector that's starting to run. So a little bit of that is on dollar weakness as well, which just helps to improve some of the commodity prices, and that feeds into the individual sectors as well. But overall, I think it's the trade talks. I mean, everyone, this week has really been a one day up, one day down. You've had a lot of volatility in the overseas markets, and we're up today, but let's see what we are tomorrow.
Yeah. How much positivity comes from actually having a better trade picture? And has the market perhaps priced that in, or are we getting perhaps a sense of people are just fearful of how things will fare exactly and where we go to from here, and consider how exactly we can fix the market to ensure that if we do get a trade deal of sorts, that we'll be able to fix things.
Yeah, so it's interesting. So certainly, if you look at the impact of trade on the globe, there's real expectations that we're going to see the US into a recession. We're expecting global growth to contract significantly because of the Chinese-US trade war. So obviously, with the move into talks today, there's not much optimism that we're going to get anything tangible. There's some speculation that you'll get a narrow trade deal. So you'll see some sort of concessions around China buying USA farming goods, the US, potentially delaying some tariffs that they're planning to implement, but the broader trade deal, which includes the removal of certain companies from blacklists, the changing of the way that China is implementing IP and basically the protection of intellectual property, and obviously the trade issues. Certainly the US very focused on what China does in terms of the competitiveness of its economy by manipulating its currencies. So there's a lot that needs to be discussed. If we look at the history of the trade war, you kind of get to a point where it almost seems like there's going to be a deal, and then there's a big pullback, and talks collapse once again. The problem, I think, is that with Trump moving into elections at this stage, there's a significant portion of the U.S. electorate that actually wants to see him take a very tough stance on China. So the trade deal is not necessarily the be-all and end-all. We know that he has linked his presidency to financial markets. So he does want to see U.S. stock markets going up, but it's one of the reasons I think he's choosing the route of attacking the Fed and trying to loosen monetary policy rather than coming to a tangible agreement with China. This is what's playing into his voter base. And unfortunately, it's a very short-termism view that the White House is adopting, because it will boost markets in the short term, but it will create allocative inefficiencies, and it will seriously hamper economic growth in the long term.
Look, he might not be there in the long term to see that fault in the market, right? But we'll see what happens November 2020, of course. Quickly looking at that Brent crude price, $58.40 a barrel, slightly up today, but we've got around 200,000 odd barrels per day lost because of Ecuador and its unrest. Does that hurt the market? Is that something we focus on a whole lot as perhaps things get worse in Ecuador? Or are we perhaps not too worried? I mean, they are an OPEC country as well.
Yeah, so if you look at it, OPEC is an interesting cartel. So if you look at the history of, cartels, essentially, especially commodity-based cartels, they naturally, it's an unsustainable economic structure, so they should collapse. The reason that OPEC has maintained its persistence, there's a good argument to be made, it's because of the dominance of Saudi Arabia within the OPEC cartel. So when you see something like unrest in Ecuador, Saudi Arabia can adjust its production to, maintain that price stability in the market as well. Part of the reason that we've seen oil come off so dramatically is it comes back to the lack of perceived global growth that's going to come through, and that inherently puts pressure on oil prices. So, I think if you look at what's happening in Ecuador, you will see the ability of our oil markets to adjust is fairly good, and that's why you see a much higher stability in the price of oil than some other commodities.
All right. Speaking of commodities, platinum, our mining production not doing so well. That going down 3.2%. Even manufacturing now, as we've recorded, coming out at 1 o'clock, then down 1.8%. That's 20% of South Africa's economy, plus minus. That is a negative territory.
Absolutely. So, I mean, this is a trend that's persisting. I mean, you just need to look at what's happening in our mining sector on a company-by-company basis, for example. Already this week we got news that Implats is looking at investing capital overseas, not investing within South Africa. We understand the reasons why this is. The legal frameworks in South Africa are far more unstable. The regulatory certainty isn't there compared to a developed market. The fact is, though, that we do have a lot of the mineral here. So some of the argument behind moving the production offshore has been that it's easier to mechanize in Canadian deposits compared to the very deep level mining that we have, which is very it's labor intensive because you're essentially in very narrow shafts and you require a person to be doing it. But the problem is if we got regulatory stability, it's I think you would see more mining investment coming to South Africa, and you would see that number improving. But I suppose on the flip side, while we have seen especially the South African platinum miners making deep cuts to their operations locally, which is why this number is coming down. If you look at their share prices, it's like the rallies have been astounding.
Yeah.
So you look at the general platinum index, platinum mining index at the moment. I think since June last year, it's up over 160%. And this is because they've cut down unprofitable ounces. They're focused on the profitable ounces, and this is allowing that operating leverage to come through, which just generates supernormal profits for the companies, which is in a country with unemployment where it is. It's I'm almost as someone that sits in markets, I'm taking the side of the unions on this one.
Yeah, look, it seems that the mining houses have certainly won this battle in a sense, if one takes a look at it that way. Gary, thank you so much for the time. Really appreciate it. Gary Boyce there from Ranswers helping us unpack that market picture. Indeed, some positivity when it comes to the JSE All Share. That we haven't seen that ever so often, but certainly we will enjoy it for now. Around 15.15 as well then for the South African currency against the US dollar, so key as well in that respect. We also got word then from S&P Global Ratings senior analyst for South Africa, Gardner Rusike, saying that there's no immediate need to change the credit rating for South Africa. So that will certainly play positivity into South Africa's hands. We won't perhaps get any further or worsen the situation anymore when it comes to S&P, who already rate South Africa below investment grade already. Well, for this afternoon, that is where the buck stops. It's back to my colleague Nzinga right after the short break. Do stay tuned. This is SABC News.